Hello guys, welcome back to the lovely trading video. In this one we're going to be doing a strategy kind of building episode. I'm going to do basically a season 2 of this. We did this a few months back, I think it was around May, and kind of just went through how we build a strategy over time, the testing we do and all of that. So to get straight into it, firstly I started off with just writing down some ideas, and as you quickly know, the old day trading strategy did work and does work, but it doesn't work as great in these slower markets, at least on the small caps. So we're now adjusting to a large cap strategy that doesn't rely on indicators, because I think it's good to be able to trade without the help of indicators, or at least indicators that you can calculate yourself. So I'll hold this up. I don't really know if you can see it. If not, when I'm editing I will throw a picture on screen. But basically all it is things I kind of want to incorporate into the strategy, and then I can start finding out kind of things that work together and what don't. So for ideas I have RSI, double tops, and then also kind of ideas on how to enter the double top. So I kind of got a seller's candle for entry, so by that I just mean kind of a red candle as it comes in. That can be engulfing or just normal, and then onto ATR. This could be a good way to calculate both take profits and stop losses. VWAP, see if I want to incorporate that into the strategy somehow, maybe as a profit target, or just use it as a way to know, okay, I will only short double tops if they're above VWAP, and only get long double bottoms if they're below VWAP. Volume, do I want to kind of incorporate volume anyway into the strategy? EMAs, and those are the key ones. Double tops is something I want to do, as if you can make it a lot less subjective, meaning you kind of have rules in place to make it 100% rule based, so when you test it you're kind of getting accurate results. So that's one thing I've definitely looked to do, and kind of justify what I consider a double top. So now we'll get on to kind of just what I've thought of so far, and then how I'm recording these tests to kind of make sense in the future, and how I can find kind of an optimal way to make this. And that would include mainly profit targets, because I can find if I'm better off doing a 1-to-1, a 1-to-2, taking profits of VWAP, a 5-to-1 or something like that. So I'm recording all this data so it's easier to get to these places and kind of just make a good strategy. So as I said, I'm looking for double tops. For this we are over VWAP, so I can say that I can short this. And we come into here, created a top, and we've now pulled back. So what I'm looking at to make this a not subjective trade is by having, if we get rid of both of these, by having set criteria on where or what we consider a double top. So why can I not move this? I'm not too sure. There we go. So for me to consider a double top, it has to come within the wick of the candle, so here, and then also within the closest part of the fill candle, so in this case the red candle being filled there, so the open of it is there. So for me to consider it a double top, it has to come within this area and not close above it. So you'll see we pulled back, came into this green candle here, and then closed within the zone, which is fine. So for me then, I'm looking to enter this, I'm waiting for that close below this entry zone. So for me it has to be a red candle, as that's the criteria I have so far. So what this would mean is this would be my entry mark. As soon as this 1 minute candle closes, I would consider that an entry. So then I can come over here, get my short tool, and then draw my entry. So all you have to do is place it like that. And then how am I calculating my stops? So first thing I'm doing is going to the high of the candle that came within this zone. So not the previous high, but this high, which may be a bit higher, maybe a bit lower than the previous move. So right now we have that, and it is 57 cents from our entry. Then all I'm doing is coming down to ATR on the candle we've entered on, and so that's this candle here, and ATR over here tells you is 40. So then all I'm doing is getting the 57 cents. You can pull up a calculator. 57 plus 40 cents is 97. So that means my stop on the trade is 97 cents. which is right here. Then I'm testing, as I said, 3 sets of data. So the first one is a 1-to-1 risk to reward ratio. So if I come down here, a 1-to-1 is right here. So actually in this trade, I haven't actually tested this one yet, as you'll see when I import this. So then all I'm doing, if it's 1-to-1 trade, I'm then basically just taking a screenshot of this, going over to Excel, and then throwing this in here. As you can see, these are all my trades that I've tested so far, and these are all on the video so far. But these are all 1-to-1 risk to reward. So you can see that's a winner, that's a winner, that's a winner, that's a winner, that's a, I'm confused where we end there, that's a loser, that's a winner, and this is a winner. So once I've got all those in there, main reason I want to have a 1-to-1 risk to reward is, and once I have a good amount of data, I can calculate its win ratio at kind of the minimum I would ever consider trading, because obviously if we get a win rate on a 1-to-1 of 70%, it's a profitable strategy. So then we can look to maybe see, can we make it more profitable? And by doing that, I can then record more sets of data. So if we go back to the chart, we then look where VWAP is, in this case all the way down here. In this case, we never hit VWAP before market close. So all I can do is kind of copy this over onto the VWAP data, and we can actually put some writing data and just say no VWAP. By no VWAP, I do mean, you'll see actually if I, what I do is I import this, and then I can show you what I mean when I'm recording this. So you don't have to obviously record it the same, but you can understand why I'm doing this, so it's easy to look at when I'm doing basically the ratios of everything. So here I can see I leave the 1-to-1 on the screenshot if it doesn't hit VWAP, or stop me out, because then I can see, okay, it worked as a 1-to-1, but it didn't touch the VWAP. But the reason I do that is so when it comes to testing, I can see that we didn't get stopped out, and we didn't hit the profit target we would use if we traded VWAP. So when I then go to do my ratios, I can kind of consider this trade, and then over time look how all the ones that didn't touch VWAP nor stop me out, and see how they react, and if they would just be able to be break-even trades. And then also when I'm recording them, you can see I'm going to kind of the closest risk to reward. So I'm not going to do a 1.8 because VWAPs do move. So when I'm testing it, I want to either test 1-to-1, 1-to-5, 2, 2.5, and so on. So I don't want any like 1.83, because I just think it would be a lot harder to kind of get a concrete risk to reward on that trade. And again, recording the ones that are losers, just so I know when doing the test. But you can see in testing so far, 1-to-1 and VWAP are quite similar. There's only 2 trades, we still get the same losing trades, but there's only 2 trades that didn't quite hit the VWAP. But the risk to reward on these are sometimes a lot better, like on this one for example, a 5-to-1. So again, that's why when we get a lot of data, we can see, would it make more sense to lock in profits at VWAP or 1-to-1? Then the last set of data we have is TradingView Max. Basically this one is, I'm not looking at any VWAP or indicators like that, I'm just seeing what is the max move on the day before it stops us out. And most of these, they won't stop us out before doing their max move. But the reason I want to see this is how often are we actually catching the reversal point? Because if we are catching it very often, it basically just means that we could do maybe a strategy that only really gets a 30-40% win rate, but we could be getting 5 to 6 or 7% risk to reward. And again, over time, when we have enough data, we could see, is that more profitable than just trading a 1-to-1 or trading to the VWAP? So that's basically all we're looking at. This is a very basic bare bones strategy as of now. That is just jotting down some ideas, putting it into testing and seeing how it performs. We've only tested about 10 trades so far, so nothing is saying this will work, this won't. The So yeah, bare bone strategy, and now we are at the point where we're putting the testing in. We will start seeing if there's any patterns or if it is working quite well off the bat. If it is working quite well off the bat, then we can just see how can we do some minor adjustments that should hopefully increase either the win rate or the risk to reward ratio, or both. So I hope you enjoyed the first episode of this series. We're going to try and do maybe 2 or 3 of these a week as I'm putting new stuff into the strategy, and I'll do everything kind of in video, and I can say why I stopped doing this or why I've added this to the strategy, so you can kind of see what my thought process is when testing a new strategy and trying to make a new profitable strategy. So I hope you enjoyed the video, hope to see you in the next one, and that's it. Peace.